you doing? I am here. The machine hasn't stopped yet, but I'm keeping an eye on it. I'll pop up and hang it out in a minute once it's done, and then I'll kind of be back with you after that. But look, I'll get started anyway. There's only 6 of us in here, so that's cool. Smash up the like button, guys. We'll see if we can get some more people to come in. No big deal if they don't, but let's see, where are we at? We've just started a brand new weekend. So this was last weekend's high, and this was like last weekend's low down the bottom here, this blue line. Now the weekend, the fresh weekend that we got, has started where? Right, well, it hasn't yet quite. It starts here, and we'll have to figure out what kind of range we're dealing with for this 48-hour stretch of time. So it ends for me on Monday 10 a.m. Right there. Okay. There. Okay. So we're almost in there. What about like 18 minutes away, something like that? Not long now. 17 minutes, rather. So the range, yeah, like, I mean, we might get a similar situation to this weekend, like the previous weekend, where it just sort of stays around the $23,000 level, give or take. So the high side being above 23, the low side being like, you know, 22.5. We may get lucky and get a like mid-weekend pump. I mean, we certainly had one back here. If we go back to last weekend, we actually pumped on a Saturday, which is very odd. Like usually the trend is set in, the highs like quite early, but this thing rallied many hours into the Saturday candle. Like very cool. Exciting to see that. The weekend before that was, I mean, similar price range, but we didn't do any like insane pumps. I think the pump happened like into the weekend. So, and much the same as last weekend, we sort of pumped into it rather than, you know, at the beginning or after it started. So, yeah, look, we are sort of lifting as, you know, the minutes tick by for the last moments of Friday here. But yeah, look, I'm pretty sure it's going to be a pretty flat weekend, a ranging kind of weekend. I don't think we dump, and the reason being is because the SPY is elevated, right? Now the SPY, the S&P 500, the NASDAQ, well, in this case the S&P 500, left us on a bit of a interesting note. Yes, we made a new high for like the week. We haven't quite hit these highs from back in December, but we're in the neighborhood. We are in the ballpark of those levels. Now, yeah, very strange that like in the final hour, we decided to, you know, correct some. It wasn't a massive correction. Like we are still on trend. We haven't like broken any market structure. But yeah, it's a 1, 2, and then look, kind of like almost like an Elliott wave, right? Yeah, well, we're left hanging there. We don't know what's going on. So this is the point where, yeah, Bitcoin is left to its own devices, and I think it sort of goes into neutral, you know? We shift back down to neutral and we wait until Monday rolls along. So get comfortable. You know, the range will set itself up, much like the previous 2 weekends we had. And yeah, I guess trading that range seems reasonable. Using a stop loss, of course, at all times if you're trading, especially on leverage. But yeah, look, it's been a kind of boring week. We've just ranged. Apart from this really nice rally that we had yesterday, for the most part, it's just been choppy. But hey, the good part of that is that we haven't lost ground. We haven't retraced. We're sort of hanging. We're hanging in this zone, and arguably, we have ourselves some higher lows. So we've got this low here, higher low, higher low, higher low, and another higher low as it stands. But look, we got lower highs too. Got this high, got a lower high that we just sort of set. So we are in a bit of a squeeze, I would say. Let's go to the 4-hour chart, and I'm going to turn on the Bollinger Bands because I'll show you how they show us still squeezing right up until now. Look at that. So obviously the most impressive move was from back here up into the first consolidation, causing a squeeze on the Bollinger Bands. And then, yeah, a really nice pop still. Not as big, but still impressive nonetheless. And yeah, we have settled into a squeeze. Hello, Skywalker. What's up, Jack? How you doing, guys? Smash up. It looks like everyone smashed the like button there. 9 viewers, 9 likes. I like it. Thank you. Bear with me. I will be hanging out my washing soon. Just average Joe stuff, you know, on a Saturday morning. S&P 500, yeah, we had a look at that. Very nice. We've sort of, if we go to the daily chart, you can see we're dealing with a 1, 2, 3, 4, fifth attempt was a breakout, but it failed. Like, it was a bit of a fake out, I guess. Kind of a dirty test of this trend line. So that's the, let me see what test that is. Oh, we're going to call it the 5th. Yeah. Okay. So 1, 2, 3, 4, 5. The 5th was a fake out. The 6th was rejection again. So we came back down. However, we found support fairly soon after that. And now we're reattempting it. So it would be really great to be able to break the structure here. So a change of character to the upside on the S&P 500 next week, perhaps. Perhaps the Fed funds rate will come out optimistic and give us the fuel that we need to move up higher beyond that 410 level. So that's the S&P. That's the stock market, S&P 500. Now the NASDAQ, I haven't looked at the NASDAQ yet, but might do that after I get back. So yeah, look, it's good progress. We've had 2 days of price discovery outside the trend line here. This was just 1 day that got really heavily rejected. You can see how severe that candle is. You know, that's all body. There's a bit of wicking there on the bottom side, but yeah, that's a solid dump, like open and dump of that day. But yeah, damn, has it been a pretty vicious 2022 that we've just come out of. Like, yeah. Now this is like the hopium, this trend here. So we've got a low here, a higher low, a higher low, and a higher low. So it's a series of higher lows, but we're still waiting on that high to break. So, you know, we need to get above 410 to start looking like we've changed the character of the trend, because we're not quite there yet. We've broken the trend line, but we're still waiting on the market structure to break. So looking good. Had some luck on AVAX this morning, which has been nice. Awesome. Yeah, Avalanche. I got wrecked on Avalanche the other day. I got stopped out in a nasty way, but that's all right. That's trading. Let me check Avalanche. Let's go to a Bybit list. Go to AVAX. Oh, up 18%. Beautiful. Yeah, I like that. What's it done in the last... Oh, okay. Yeah. In the last hour, 5% up. Very nice, Jack. That's cool. When did it break out? 5 to 6 in the morning for me today. And it's gone up a good 15.5%. Beautiful. So you can see where my position was and where I stopped out. Pretty disappointing. It was actually a really wide stop in that case. Low leverage, so, you know, whatever. That's all good, you don't win them all. I was sort of like hoping that this trend line here would hold, but we lost it and came down. I stopped out before all of that carnage. But look, I didn't get back in. I didn't run the gauntlet. But look, I think the key signal here, if I turn on the EMA tool here, getting back up on top of this 200 EMA. Let's go to like say time frame we're dealing with here. I mean, it's been above the 200 on the 4-hour chart for some time, and the 1 hour, like slight dip below, but regained that footing. Let's see. Let's go to the scalpers, the micro scalp chart. So the 1 minute. Yeah, look, it's. You know what I love? These trends where it breaks above the 200 and doesn't dip back under it. Like, you get some wick through it, sure, but you know, from an entry on that break, that was beautiful. That was an excellent trade to take. Like, you know, Bollinger Bands to give you an idea of the squeeze and the explosion, but yeah, excellent trade. That's the kind of trend you want to see. And look, it's still going up. You know, it's pulling back at the moment, sure. Keep your eye on any kind of EMA crosses and any kind of like market structure breaks to the downside on the small time frame. What you want to avoid is a change of character to the downside followed by a break of structure. Now, you're safe if you're only getting change of characters that are standing alone, because they don't mean a whole lot. They're just, you know, they're kind of fake outs, if you will. But, you know, the thing that keeps you on trend is when you have a change of character followed by a break of structure. And that way you know that the trend is active and it's alive. That trend won't die until you get a change of character followed by a break of structure. So it's still good. This trend is still up, even right now. Yep. So change of character to shake out some weak hands, possibly, or some scared money. We're about to get a little EMA cross down, but that, you know, that doesn't spell the end necessarily. Like you can see, we did it back here too. But then we crossed back up after finding support. Now, this would have been a great entry with that strategy that I was talking about the other day with the Bollinger Bands. When you're above the 200 EMA and price dips below the band, you take a position on the re-entry to the band, the candle that re-enters the band and closes inside it. You take your entry, you set your stop loss below the wick of the one that came out of the band. And that is your, you know, your long, and you ride it up. You can either take profit at the top of the band, or you can just hang in there until you get an EMA cross down. There's many ways to take profit, different ways to, you know, catch the signal for taking profit on that strategy. But yeah, look, this one was really nice. I really like this one. So we came out of the bands. We did not re-enter the band properly until this candle here, this bullish engulfing candle. Let me zoom up on that. This is a good sign of a trend, like, you know, continuing up, is when you get a candle like that one that engulfs the previous candle body like that. Beautiful. Likely to continue up when you get a bullish engulfing like that. There's another bullish engulfing there. Notice how the sell candles don't engulf on an uptrend. Like they stay like smaller than the previous green, smaller than the previous green. This one, little bit dodgy, a little bit scary because it engulfed, but the next candle engulfed backwards, like huge engulfing candle. Look, there's a bearish engulfing resulting in a 3-bar down. So yeah, paying attention to candles, whether they engulf or not, is like a nice little confirmation of how things are moving along. But yeah, gotta love you some bullish engulfing candles. They're just, yeah, they give you that confidence to stay in, you know. And there's a whole series of them. Pretty nasty bearish engulfing candle there, but you know the EMAs are still holding in this case. Another bullish engulfing down, like nice pullback there, nice reset. Probably an opportunity to get in on those pullbacks, to be honest, if you're feeling lucky. And then you notice, you know, like a candle go green and close like at the same level, so it's sort of like a tweezer. Yeah, look, we've got a change of character. We've had a bearish cross, so this is where you want to pay attention. You want to start being careful, expecting, you know, further growth. But, you know, we'll keep your eye on it. Just see how it behaves off the bottom of the band here. But yeah, look, there could be a correction coming up to come and test this 200 EMA. Now, this is just obviously the scalp chart. This is the 1 minute time frame, so... now the trend is quite stale. It's been up for a long time. That doesn't mean it has to end, obviously, but just be cautious. Like, I think the better times to look for an opportunity is when price freshly breaks above the 200 EMA, like right here. X marks the spot right there. That's a fresh trend. Same with shorts. If you see price freshly break below the 200 EMA, that's, you know, that's opportunity for a short. Like this was a short, you know, a short. Didn't last long. You know, kind of risky. You did have a change of character followed by a change of character in the opposite direction. So it was a little bit of indecision there. No follow through with a break of structure. However, this change of character was followed up by a break of structure, so that was a bit of, ooh, you know, like it caused this huge wick to the downside at least. So you can see that. That would have been nice to catch that short up here. But yeah, that's kind of the way I've been looking at scalps recently. Now on my trading platform, I do have the Ishimoku clouds as well for secondary confirmation. Which I could actually turn on right now, to be honest. Let me see if I can find Ichimoku. I just want the built-in, and I just want to go everything but the line, so everything just remaining with the clouds like that. And yeah, like, look, to give you the confidence in a trade, if you do a cloud breakout like this, and you hang above the clouds, that's just further confidence that it can give you for a trend, to stay in a trend. This would have been a bit of a scary situation where price came down and tested the 200 EMA because it was starting to like hint that it was breaking below the clouds, and you had a bit of a Kumo twist here, so that the future cloud going red, that's kind of scary, right? But yeah, look, if you had a bit of, I don't know, a bit of luck on your side and you crossed your fingers and you didn't close your long, you might have caught the rest of that. But look, on a higher time frame, it's a different game again. Like you can see, the cloud is still extremely green. We're so deviated on price from the cloud, so that shows you the strength of the push. You know, the further the price action is away from the cloud like this, you know, the stronger the trend. Whereas if you get price dancing next to the cloud or touching it and coming and going, it's not as intense of a trend. Like it's still an uptrend, yes, but it doesn't have the same energy as when it's so deviated away like this. But yeah, look, this trend I don't think this trend's over yet. It's pulling back nice, it's cradling at the moment. If you were to sort of like cowboy trade this, you know, give it a couple of candles, wait for, you want to see some kind of like bullish engulfing 1 minute candle or something of that nature. So yeah, it obviously risky as hell. You're trading in no man's land basically. But look, that's FOMO for you. FOMO is risk inherent. Like it's risk.com. Be careful FOMOing like that. Yeah, I guess the better thing would be to just wait, be patient, wait for a Bollinger Squeeze. It's good when the Bollingers squeeze up like this. It reduces the volatility down. Your stop loss can be set a lot tighter, and you're not in the middle of nowhere. So it's like, it's got a bit of context for a breakout. So these Bollingers are extremely expanded right now. I wouldn't be messing with any positions if I was trading smart. Don't do any kind of dumb shit when when the bands are so wide apart like this. You want to be very careful. All right, let me go check on my washing. I'll be back. I'll be back in a second. If the machine stopped, I'll go hang it out. But anyway, I will be back. I will be back. There's the weekend, 2 minutes in. Not a bad start to the weekend so far. Little green candle. All right, I'll be back. All right. Thanks for hanging in there, guys. I'm back. Washing is out. It was only bedding, so it didn't take long. TMI, too much information. All right, what do we got? What do we like, 15-minute chart here. There's the high, there's the low at the moment. That's our weekend range right now. If we get stuck in a range that tight, then damn. But I'm sure, like, obviously this is gonna expand as we get more price action, but we are above 23K. We're hanging in there. By no means have we started crashing like a lot of people are sort of like forecasting and suggesting. Now, last weekend into the week ahead, we did form a descending trend line here, which we broke out from and caused a new high. So that's cool. Playing the breakout of that structure would have been great as a trade if you were looking at it. Let me just change this to a different color so we can see it better. I don't know what color suits. White's fine. All right. Let's jump up to the hour chart. So yeah, really nice break of trend line there. Right here, but then obviously price action came back down. That move was not sustained. You know, but hey, look, a new high pushed is cool in my books, not a problem. And we're still, you know, we're still in the same kind of consolidation. We're looking optimistic though. We're on like a high side of this, you know, the previous rectangle was something like this, right? And now we're sort of playing with something a little bit more elevated. You know, it's like that next sort of step up just slightly. So not bad. I think this is kind of like buying us time. It's buying the bulls time to build a case for another leg up. That's what I feel. The longer we spend staying flat and supported at this level, I think the more confident the market will get in taking new long positions, that kind of thing, looking for a breakout. So, you know, obviously this whole move up, the whole year has been full of bearish divergence. Has that stopped Bitcoin? No. This is hourly bearish divergence after bearish divergence. Let's check the 4-hour chart. Like, same again. We got really nasty bearish divergence, yet we're still hanging up here, like nice and high. Daily chart, I mean, there's been no divergence yet. Technically, you can see, like, you know, the highs are starting to like slide down a little here, which is, you know, divergent of what's been happening because we've been going up. But look, we're still elevated. The weekly, I don't even think we've gone overbought yet on the weekly. We're still working it out. We're still climbing. If we go to monthly, check it out. We're only just starting to curl on the monthly RSI. Now, if I go to a longer time frame, let's go to a chart that has a way more history on it. I do like this one, the Bitcoin index, BTC USD index. All right, let's go to the monthly. We're checking out the RSI. And if I go logarithmic so we can see the whole history, you can see, look, this is the lowest RSI reading we've ever pulled on Bitcoin ever. So it's the biggest correction Bitcoin's ever had, basically. That's the context I derive from this. I think I've said that in another stream. You've probably heard me say that before. But yeah, like, very nice. You can see last bull market, by the way, wasn't as RSI strong as the previous two cycles. Like, see that? We came up here, like all the way up here in those spikes, right? These levels were, you know, up at 96, 97, right? And, you know, our previous bull market only came up 91, which is still good, 92, but nowhere near as high as these blow off top market highs. Now, my theory is that a strong RSI reading like that is caused by a single push to one high and then a retracement. Single push to one high, blow off top, retracement. However, in the market we just had, in the bull market we just had in 2020, 2021, it was a double top. So you had two pushes of strength, which diminished the initial run-ups, overall, power in the push, if you will. So it was a distribution. A lot of people calling this structure over here a Wyckoff distribution. If we go back to the daily chart and have a look at that closer, this whole area is distributed in such a way that any kind of progress in price was suppressed, but not so much as that it caused the bulls to lose hope. They just ever so slightly give you a higher high, just ever so slightly, just to keep people confident and keeping the lows high too, before bang, there's the break of structure because we got lower than this point, so change of character. And then look, key point here, lower high. So that's a change in the strength there. Sorry, that should be just high, then lower high. Anyway, the point being, yeah, it was a Wyckoff distribution schematic. Some people call this some kind of Wyckoff accumulation schematic, which is, okay, that's cool. Same with this one here. This was sort of like Wyckoфfian as well. But yeah, like when you get these sort of like basements and ceilings, that's your classic accumulation distribution type situation. And what do you think we've just come out of? This to me looks like some kind of, at least, it's not even short time frame. It's like it's roughly the same size as this accumulation zone. This was a big, like if you want to talk macro, I feel like this whole box here is one big old accumulation box. We haven't even broken out to new highs yet. I do kind of agree with people saying that we're not in a bull market until we get above, get around $30,000 level. Like that's when we know that it's, a proper confirmed bull run, or bull market, if you will. But yeah, different people have different, ways to define a bull market. If you ask me, I do like it when price gets above the 200 daily EMA. That kind of indicates that things are looking healthy, And like, looking back, we only sort of briefly did that back in March of last year. So yeah, nice move. Very strong trend. So obviously, sorry about that. My streaming software just had a bit of a hiccup. I'm back. Yeah, so we had a very close call here, where the EMAs were teasing that they might start crossing down, but look, we got sustain and we supported this zone and rallied up to the next level. It's kind of what we're getting now. It's been teasing to break, but we're maintaining. It's just kissing that EMA at the moment. The fast and short EMAs there. All right, or the fast and slow rather. So I'm going to go to a different set of indicators now. So this is the liquid index. Excellent. Let's go to the daily 50 and 200s. So these are the slow ones. These are the 200s. I'm going to hide the 200 EMA and I'm going to hide the 50 MA. So this is just the 200 simple moving average and 50 exponential moving average. The one that I was like stuffing up yesterday trying to say, or the other day, whatever day that was. All right. So yeah, look, we're dealing with, if we go to the daily, the potential for a golden cross. We're like right on the cusp of getting a golden cross, like very exciting. We had the last time we crossed paths was the death cross back in January of last year. So it's been like 12 months that we've been trending below the 200 here on the daily time frame. This, by the way, if you want to do like multi-month swings, like even ones that go for like over a year, a position that really takes you through the thick and thin of it, just go follow this 200 daily simple moving average and keep it simple with the simple moving average, right? When you get a clean break into the downs, like the underside of the 200, it's a bear market, right? That's how I define it. It's a bear. And until you break back over that, it's bearish. Like you're in a bear market. Yes, you can get relief along the way. You get these little relief rallies. They don't really do much. They don't go too far, but they're there. You can trade them. But overall, trend is down, right? Because price is trending below the 200. Here was a very big hint, by the way. I'll circle it right here. The rejection at the 200. That is your hint that the bears are in control. It's a bear market, no question. So all the people that had hopium here for like recovery, it's like, nah, there's no evidence yet. Price is still below the 200. Don't get your hopes up. Look for shorts. Look for just look for the next rally, relief rally to open up a new shorting entry, that kind of thing, right? But yeah, we can go back through the history and look at the bull, like the death and golden crosses. So the death cross, the golden cross. So the cool thing is, yeah, like we're right on the doorstep of a golden cross. Price has got above the 200. So if you took that as a signal just to get in, you would have been in at 19,500, which would basically put you in profit of up to the very top, basically 22% profit in the space of 12 days. So less than 2 weeks. Not bad for Bitcoin. I mean, Bitcoin, we all know how heavy Bitcoin is and how hard it is to just get a 1% move out of it. But 22% in 12 days is very, aggressive. So very nice. Now, obviously, if you want to play shorter term or shorter time frame moves, like you just want to catch, these trends, that go on, even these shorts that came in, just drop it down a time frame, So we're on the daily. Let's go to the 4 hour. What does that look like? Price once again makes clear breaks below and then clear breaks above the 200 to get you on trend, right? It can get messy though, like you can get in and out a lot when price is doing this. So you kind of just want to avoid ranging markets. There's probably ways to tell that price is going to dance around the 200, and that is when your 50 EMA is basically hugging the line. It's basically on the line and it's not giving you any separation from the line. It's when the lines start to depart and you start getting this, like, duck mouth type thing, or alligator mouth. This is kind of like how the Williams alligator works. But yeah, you're just waiting for that expansion, kind of like the Bollinger Bands opening up, right? So all of this you could consider just squeeze. And you want to avoid trading the squeeze, right? Because it's just there's no trend. It's just a choppy market, very hard to trade. But yeah, look, we got nice evidence back here. There was hours and hours of evidence right here that things were looking good because we were riding it as support. You could draw a straight line under like most of these candles here, and they all respected, or most of them respected, that line as support. So very, very strong evidence there that there was support at 16,900-ish back on, the 8th and 9th of January. So yeah, we just really kicked it off with this bullish engulfing. This is what started the party, if you ask me. This candle right here started the party. And we just did not look back after that candle, did we? I don't think we ever came back. Yeah, it's just been elevated ever since. You know, the higher time frames give you the comfort of what's happening. 1 minute chart, it's noisy as hell. Like, you're gonna get all sorts of signals and mixed messages, but it works for scalping though. Like, if you're scalping, if you're intraday trading and you're doing the micro trends of the chart, then yeah, 1 minute's great for that. But look, yeah, 4 hour, it's a nice, you can do swing trades off the 4 hour, no problem. I mean, you're in a swing right now if you took the signal to buy off this cross here, this golden cross. Let's check the 1 hour. I think even the 1 hour is healthy. It's maintaining that same golden cross the whole way up. The 15 minute, okay, you're in and out a lot more on the 15 minutes. So these are like, you know, you get a little bit more signaling off the 15-minute chart. So yeah, if you want to keep it simple, don't go any lower than the 1 hour chart, basically, for swing trading. I don't recommend 15, 5, and 1 minute for swing trading. They're more scalpers type charts. But yeah, look, you're going to get great signals 1 hour and up. It's just that you have to be more patient and let it play out on those time frames. And you have to have a bit of a stomach for drawdown, because your entry may not be the most perfectly sniped out entry either. So you've got to really, like, you know, gauge what's happening, know when to cut it, like when to pull it if it's not working out, as it was sort of hinting at. Like, here's a good example. We had a golden cross here, but, you know, let's say you got in these candles after the golden cross because you saw that there was support on top of the 50 EMA. You would basically set your stop, you know, at a responsible level below your entry. Like, you know, try to stomach as much as you can. But yeah, obviously this did a clear hunt to stop people out that were taking positions after this. But then yeah, obviously we got the death cross here, and it, like, you know, totally, what would you call it, invalidated that as a move to take, like a position to take. So very noisy and choppy through here. You know, very hard to pick the trend, you know. It's like, okay, we have a high, we have a lower high, we got a low and a higher low. So it's kind of, it was squeezing at that point. There was a bit of a triangle, and then we broke out, but then that just didn't go anywhere. Like, the highs weren't getting higher, and then we kicked in a new low. So yeah, there was a lot of mess through this section. This is kind of like when you go, okay, look, this ain't working out quite as how I hoped. We're really, if you have the patience for it, you're waiting for the real big explosive breaks above the 200, and that's when you know you're onto something special, you know. And if, you know, if you're willing to sit through a bit of pullback, this didn't even really quite touch the line, but yeah, it basically stopped above the line, and, you know, we carry on. So yeah, it just, I guess this will come with experience. But yeah, you're just looking for those nice breaks of the line, of the moving average, right? Anyway, I'm gonna go back to just the Bitcoin, like, short time frame. So we'll go to the 15-minute. We can see that we've got a bit more of a range set so far for the weekend. So we can, like, elevate this a little. So what's the high of this candle? 23129.83. 23129.83. Okay. And obviously I'm going to have to keep moving the goalposts, but eventually we're going to find out the top of our range and the bottom of our range. So yeah, that's, once we sort of define those boundaries, that's when you can start trading the range, you know. Go short at the high end of the range, you know, with a stop loss in case new highs get made. And then, you know, ride the short back to the low end of the range. Close the short, open a long, you know, that kind of thing. If I go back to the previous weekend, I can sort of like highlight how that would have played out, you know. Now it wasn't a perfect like range. There was like a lot of high side and then a lot of intermediate. So maybe like if you can try to identify a range like through here, like that was like a little sub range within it. But as long as you can get a bit of price activity off a support line, and then a bit of price or as much price activity as possible on a resistance line, you can get in and out on that range for scalping. So that's how you try to trade these ranging markets. You need to do it on a low time frame. But yeah, scalper's delight. Or, you know, grid bot. Just set up a grid bot and it'll do it for you, you know. Learn about grid bots, check them out. I think there's a couple of exchanges at least that have grid bots available for their clients to use. All right, guys. I think that pretty much wraps it up. There's not a whole lot more to talk about, other than the fact that we're into the weekend now and we're just hanging out for Monday. You know, we're just waiting to see what the SPY is going to do. Dollar index, it's low, but it has kicked up a little off a support. Little bit of a double bottom, dare I say it, like this. Price sort of like has rallied up and then found its way back down to the same line, tested it, held support, and now we're, you know, heading back up in an upward trajectory here. Not violent up, just up to some degree. We're still getting lower highs, which is, you know, we want to keep this as low as possible. We want to keep the DXY as suppressed as possible, not so out of control. Keep a lid on it, you know. But yeah, that's the DXY. Avalanche, look at that. You know how I was talking about a pullback and then wait for a nice solid candle? Here's your evidence. So this candle here, you know, was definitely a growth candle off the previous. Even though the previous was green, it was still, you know, extremely tall. It's showing like a build of momentum to the upside. Now on the lower time frame, let's go back down to the 1 minute and see if we can see even better signaling. That's right, we did death cross and we broke a structured here. So I would say wait. You know, if you're waiting for like more solid entry, you could wait until you get a Kumo cloud breakout and like, you know, start hanging up on top of the cloud. I'm going to save this layout actually. This is good. I like the way this is set. So let me just go save and then I'll choose from the list and overwrite my EMA cross Bollinger Band strategy. And this way it includes the Ishimoku clouds, the Kumo clouds. And we'll say, yeah, I want to replace it. Cool. And there we go. That's my template. Now, don't let the Kumo clouds throw you off some potential entries. By the way, on the Bollinger Bands, so you can see we wicked down just outside of the Bollinger Band, but then we got a close, a green, bullish engulfing, mind you, close after that, which would have been a really nice signal to go long at. You know, that candle right there, taking a long here, setting your stop below the previous wick, and then riding the following trend out. This one would have got you in a little bit of trouble because we dipped out and then we closed back inside on this candle. So we may have taken a position here expecting, like, you know, some recovery from this point with the stop set. You know, this is kind of ugly because like your stop's all the way down here, so it's not a very high quality trade. You know, everything's really steep as well. Like, you know, your EMAs and your MAs are, you know, your band is quite steep. We only just freshly broke down too off an EMA cross down. So yeah, I wouldn't call that a very confident entry. But yeah, look, like when you start seeing Let's just see how it would have looked at this point. So it still would have been looking scary at this stage to get in on this candle, because it's like there's no evidence of it just turning around here. Like for all we know, it could have kept crashing like this. But lo and behold, then you get some examples of like support here. See how all these candles kind of like sat together on like some kind of floor? Maybe that would have given you the confidence to say, hey, like, yeah, we're holding ground here somewhat. We're not getting a ladder down. We're not getting this business, you know, where it's like descending. We're getting flat. So maybe you would get some confidence off that and set a reasonable stop loss, probably higher than this point with a stop when this happens. And then, you know, you just hope that the position holds, because you've done your analysis. You know that price is still above the 200, so you're safe in that regard as far as the trend is concerned. But yeah, look, there is hints at this, larger scale avalanche trend starting to weaken. We're getting a red Kumo twist. Well, we had one. We're getting a twist back to the upside now. But look, this is what I'd keep an eye on, is like you've got a high here and then you've got a lower high here. So that's kind of changed the structure of this move now. But look, we're still above the 200 EMA. So it's not the end of the world just yet for AVAX for this bull trend. But yeah, look, can you guys see what I mean by like catching price on a fresh trend, like back where it first breaks out? Initial breaks out are always the much better spot to get in at, because you're basically setting yourself up for only dealing with a minimal amount of drawdown, like with your stop loss. If it was to fail back down below the 200, you're out fairly quick. Whereas if you get in late, like let's say you FOMO in on this, your stop loss has to be back at a lower area, like a pivot point, like right here. So that's a really wide stop. That's a lot of risk to take on just for a scalp, like to maybe get that move, So better to, wait for a fresh trend, get in on fresh trends if you can help it. But yeah, no financial advice. You just do what you feel comfortable doing. Maybe you'll work out a system better than I can with this on how to take these signals with these specific indicators and the combination. But yeah, it's been profitable for me. I've traded it a few times, this system, and it's worked out. There's been a couple that I've stopped out on, but that's okay. Stopping out is part of trading. You're not expected to have a 100% strike rate. You're not even expected to have a 60% strike rate, to be honest. But as long as your risk to reward ratio is positive, you're getting more than 1-to-1 for your risk into reward. So you want to get at least like I would say like work on at least getting like a 1.2-to-1 or a 1.5-to-1 risk to reward would be nice. A lot of strategies call for a 2-to-1, but that basically affords you to be wrong more often than not, right? So if you're only right 40% of the time, you can still be profitable with a positive risk to reward ratio, like a good risk to reward ratio. Anyway, let me catch up on some of these comments. Got calls for next week? I sure hope so. Calls. You know what? I think keep your eye on the federal funds rate and trade off the trend that settles in after that. Because once it figures out where it wants to go off that, you're gonna see a nice trend to trade. Check out this, guys. We're starting to climb here on Bitcoin. We're sitting in new highs for the weekend already. Make sure I stay on 10 o'clock there. But yeah, this thing's obviously going to be drawing out its range for some hours to come yet. 23189 is the current high. 23189, like that. Okay, so we're starting to get a bit more range here. Nothing compared to last weekend's range, but that's cool. We're still working on it. It would be really cool to get above the previous weekend high this weekend, like during a Saturday, Sunday. Or even better yet, dare I sort of suggest a push above this? Would that be too much to ask? To get above 23,500? Can we do it? Maybe. We've got all weekend. All right. How's XRP looking, and combine that with how BTC is looking? Okay. So BTC is looking good. It's looking healthy. We got higher lows. Already into the weekend, the first like couple of hours of the week, or the first few minutes of the weekend, we're looking bullish. We've made progress. We're up 0.4%. Now let's check out. You said XRP. I'm going to use this chart here. Scroll down to the X's, XRP. Wow. Look at that beautiful move up in the last, in the last few minutes. Really cool. All right. So XRP is currently on trend. Keep your eye on the EMAs. And, look, as long as we stay deviated from the cloud here, this trend looks like it's only just sort of done its first leg. It's pulling back right now, so there could be an entry opportunity off this pullback here. If it holds ground, and you can identify just wait for a bullish engulfing 1 minute candle, and then that'll give you a bit of confidence that, that the trend is trying to continue, so to speak. So yeah, obviously this candle's a fairly big sell candle here. So just let it do its thing. It'll get you out of trouble if you just be patient. Okay, this is cool. It's getting bought up. There's a bit of a tail. That's what you want to see. You want to see the candle retract, and if you can, get a hammer. If we get a little bit of body on this tail, we've got ourselves a hammer. Oh, it's looking like a doji. Okay, doji. What kind of doji is that? It's a bullish one, I bet. Let me open up my cheat sheet for chart patterns or candlestick patterns. Crypto education candlesticks cheat sheet. Okay. I'll make it smaller so I'm not obscuring the chart for you guys, because you want to be able to look and watch the price action. But here is a candlestick cheat sheet. What do we have? We have ourselves it's some kind of doji, I know that. It's like a Jesus cross crucifix doji. It's not quite a dragonfly, it's more of a cross doji. Now, where are the ones that show trend? Yeah, here's trend. Okay. Because it's kind of it's fallen into it, hasn't it? A bullish abandoned baby. Jeez. There's so many names for these. It's crazy. There might not be an example. Not in that sheet anyway. Anyway, yeah, no doubt it's a cross doji. That's what that was. So I think that's just neutral. When you get a doji, it means indecision. Remember, we are on the 1 minute chart. It's not. These candles aren't totally influential. They're not going to give you some massive pivot. But look, it's just slight confirmation of some action. So yeah, wait for those candles to close and show you the direction. Obviously we're still continuing down here. We're still pulling back. We've kind of done an A, B, and this is our C leg here. Waiting for that support, evidence of support. See how risky it is getting in on an expanded Bollinger Band? See how the bands are expanded here. You want to get in when they're squeezed if you can help it. Get in on a squeeze, and you should get into some nicer positions off the squeezes. Like right here, this is a nice squeeze, bit of a fake to the downside, and then up. So that was cool. XRP. Yeah, it's looking okay. Just wait for this to confirm like a pivot, which is where you get, you know, candles bullishly engulfing the prior candle. We have none of that yet, so obviously still down. Just trying to see if I've got any other cheat sheets with candlesticks on them to show. Yeah, I guess I was kind of hoping that would become a dragonfly doji, like this. See how we had a down move, dragonfly, and then up. That could have been cool. It was more of just a cross doji, or just, you know, your plain old doji candle, which is neutral, so no bias at all. Marubozu are just solid candles with no wicks, no shadows. Hammers, inverted hammers, dragonfly doji, bullish spinning top. These are all, you know, your bull candles. Bullish kicker. That's like a stock market one because they've got gaps. Bullish engulfing. Bullish harami. Piercing line. Tweezer bottom. Yeah, tweezer bottom. I like the tweezer. They're kind of like pivoting candles, you know. Another cross, another doji, followed by a bearish engulfing. Further downside here. I would say let the bands squeeze back up. So this might take some minutes to sort of like resolve itself here. Like, but you want to see the bands squeeze back up if you can help it. You know, like maybe we start consolidating in here. And then, you know, hopefully you basically set your entry off a signal in the squeeze with your stop loss below the squeeze. And that way your risk range is quite tight. And that's what you want. Every trade, you want your risk to be as tight as you can manage to find one. You don't want to be taking on risk in an expansion of the bands because, you know, like your drawdown's massive if you're wrong, right? So yeah, wait for the contractions, the squeezes. Squeezes reduce positions. Good positions in a squeeze. Which, by the way, on the 4-hour Bitcoin chart with the bands on, if I hide the drawings, you can see we're in a squeeze right now. We're squeezing into something. See what happened here? We squeezed and resulted in a nice pop. We're squeezing right now. Are we going to do a pop to the upside, or is it going to completely fail and go down? I don't think it's going to go down. Not by the sentiment that was left to us by stock market, you know? So I am optimistic still. Not financial advice by any means, but look, we are sort of holding ground really nice here. So that's what I'm seeing. Had some luck on AVAX this morning, which has been nice. Awesome. I caught about 12% of it. Whoa, that's amazing. 12%. That's great, especially if you're on leverage. It definitely was hard to grab it using Itchy, but the signal opened up. Cool. Couple of re-entries throughout the move as well. Nice. Careful with those re-entries on the same move. Daily close in 3 minutes might change that or accelerate it. Right. I haven't looked at Avalanche since the daily started, so let me go back and have a look. XRP looks good on the 4-hour. It's just had a retest of the cloud, breaking back outside the top of the cloud with a buy signal on the EMA cross. So you know, if you've got longer term tolerance for a drawdown, then this might be an okay entry. Not financial advice. AVAX, Avalanche. Let me go back down to the minute chart. Got a lot of squiggles on this one. Let's delete all that. Change of character followed by a break of structure. Beautiful. When you see a fresh break of structure after change of character, you can take position at that break and then set your stop below here, and you can catch that, you know, that preceding move in the direction. They don't always work, but it's more often than not a break of structure after a change of character produces some kind of move in the direction of profit. So, you know, on the downside and on the upside. Now, when price is trading above the 200 like it is, obviously you'd be like better off looking for, you know, hunting out long entries rather than trying to find shorts. Even though shorts are still possible, it's just that you're taking on a little bit more risk. So if you want probability on your side, go long when you're above the 200 and go short when you're below the 200. And that sort of counts for all time frames. But yeah, this is looking cool. It looks like it's maybe trying to cradle on top of this EMA, this 26 EMA, I think this one is. Kind of like the 26 of the Ishimoku. Of the baseline, or the Kijinsen. Oh look, we're losing it. Okay. Careful. Careful, careful. Hey. Buddy is traveling and listening. Cool. Travel safe, my friend. TA23, yo, what's happening, mate? Super Coke, I'm voting Rick as supreme leader of the coming post-economic apocalyptic unified world government on the blockchain. Thank you. Rockets, rockets. How you doing, Rick? Are we in for a small recession? There's no, for me, I haven't seen any data, any concrete evidence of a recession. Quite the contrary. I've seen evidence for recovery. Let me just quickly point you in that direction. Forex Factory Calendar. Let's go to this week. Advanced GDP, positive. 2.9% GDP is suggested here for Q4 of last year. So that pulls us out of the spiral of negative growth. And we've had, look, that's the second consecutive positive quarter there. So Q1 and 2 were negative, which is technically, or quote unquote, a recession by old standards, or like by, you know, the usual standard of the way recessions were, you know, called. Which is, yeah, two negative quarters of GDP. But look, we've just come off the back of 2 positive quarters, so that's awesome. That's a sign to me that there is no recession at this stage. Whether it's in the future, I mean, people call for recessions all the time. I mean, that's what I've noticed that in any parts of the market before, because they see that the stock market is this big exponential trend that goes up, with corrections along the way, but for the most part, it mostly goes up, right? So, you know, you're gonna have people calling, oh look, this can't sustain forever. It's not just gonna go up eternally. There's gonna be some massive depression level recession on the way, and that they're always calling for it, man. It's, yeah. And they come up with their cherry-picked excuses as to why the recession's coming. You know what I mean? I'll believe it when it happens. Like when we get the solid evidence that a recession is coming, that's when I'll believe it. But right now it's just FUD. That's what I think. We got the funds rate coming up soon. That's another key indicator. Look, they're actually calling for only a 25 basis point hike on the 2nd of February for me, 1st of February for you guys in the US, which is down off the previous hike The previous hike was a 50-point hike. And then the hike before that was a 75. So you can see that they're slowing the hikes down. They haven't pivoted or paused the rates, but they've at least slowed the increases. So that's kind of optimistic if you ask me. And then later in February, like halfway through Feb, we have the CPI, so the Consumer Price Index that measures inflation. And that has also proven, there's figures here telling you, look, 9.1, 8.5, 8.3, 8.2, 7.7, 7.1, 6.5. This is down. This is sliding down. Need I show you the chart? Inflation rate. Down. This is the white dotted line is the trajectory, which is, basically like the best we can do is the forecast by this website called trueflation.com. They try to measure inflation on a day-to-day basis. So that's currently what they're saying is 5.3, 5.4% inflation. This is where the government last reported inflation at 6.5. So, if trueflation's anywhere near accurate, even just ballpark, it should be a good CPI coming up in the middle of February. What's the website I want? I want Trueflation. That's what I want. Let me just check what they're saying. 5.4. Lowest this year has been 5.3. So really nice, really good. What are your thoughts on Gala, Rick? Do you mean fundamentally or technically? Charts, because technically Gala is in a really nice bull trend. Look at the moment. Look at that. This is the 5 minute. This is the 1 minute. This is trending right now. Gala. Be careful. Don't FOMO into it. Wait for a reason to get in. Don't just like jump in at any moment, because you could catch yourself on a bag, a really bad position. If you can't help yourself and you want to get in, just make sure your stop loss is set like somewhere like that, below this little structure here, and that your FOMO would be somewhere like that, and just expect it to stop out potentially. If this move is exhausted, it'll stop out, and that way you're out of danger. But look, like, the FOMO is already working out. But yeah, look, getting in late to trends is dangerous. I'm not saying it's not profitable and that you can't do it, but like, it's just not advised. It's better to get in on a setup. But yeah, Gala's looking good, guys. There's a trend that's currently playing out. We're very deviated away from the Ishimoku cloud, so that shows you that it's a strong trend. We're riding the fast EMA. We haven't even come to back test the slow EMA, not since back here. So yeah, that's Gala. Not bad. Let me just check like the 4-hour chart for Gala. It's been kind of choppy through like here. Not terrible, but yeah, this is a nice change in direction for it. Look, it's starting to kick up, and we're starting to test these highs here. This is looking good for Gala. We could see like a really nice parabolic move coming up here on Gala. I reckon a lot of volts. There'd be a lot of volts right now popping up on the back of the optimism. Look, ENJ, that's up 8.3% already for today. What are we? An hour in? That's a lot of performance. ENJ, what is it doing? It's popped. Look at that cloud break, that Ishimoku cloud breakout on the 4-hour chart. Let's go to the 1 minute. Yeah, damn. Okay. Change of character. No red change of character in sight. It's just been green. Change of character. Break of structure, break of structure, break of structure, break of... all in a row. ENJ, very strong. Look how deviated it is from the cloud. That shows you how powerful that move up was. Sand, Mana. Man, these are all gaming NFT, like NFT type gaming tokens, right? ENJ, Mana, and then Sand. They're all, yeah. NFT gaming, guys. Even Bonk is having a bonk at the moment. It's up 1.5%. APT pulled in an amazing day a couple of days ago. Check out that candle on the daily. That's a daily candle, guys. It's 48% up. APT showing support at this very scary elevated level. You know, if you've got the guts to get in, I would set a stop below this range here. You don't want to be riding price below that level, you know. Pick a little bit of a higher time frame, maybe the 15-minute or the 1 hour, and you just identify the lowest points, and you don't want to be in it if it gets below that level, you know. So the closer you can get into a level of like an extreme level, an extreme low in recent price history, the better. You know, the better you are to set up for a nice, you know, start of trend position. Same for the sell side. Like if you're opening up shorts at resistance, like maximum or peak resistance with a stop loss set, you know, reasonably above it, obviously, you can catch rejections for shorts really nice. Like you don't need any indicators for that kind of trading. You know, if you can identify a range and play off the range boundaries, you're in. You know, you're making profitable trades with that. Yeah. Anyway, guys, that's all I've got the energy for at the moment. I probably won't stream tomorrow unless something exciting happens with price with Bitcoin. Because, you know, there's not going to be a hell of a lot to talk about, and it's all the same stuff anyway that I've sort of covered. You know, especially if we get into a range and we travel sideways. But yeah, anyway, I do appreciate you guys stopping in and smashing the like button and all that good stuff. Take care whether you're trading today, or enjoy your evening if you're going to sleep, and I'll catch you on the next stream. All right, take care.